Well, for a lot of you that are renting, it's getting that time of year again where you have to make a decision. Are you going to rent or buy in the coming year? So today we want to go over some of our economic news that we do on a daily basis. Then I'm going to show you a couple tools that you guys can look at to see the area that you're looking to buy, what it looks like, how many houses are coming to the market, what's the appreciation rates, are they appreciating, are house prices going down, what's going on and all that. Then I'm also going to show you our buy versus rent calculator. And it doesn't mean that if it says rent, then rent, or buy, because there's a lot of other pieces behind the scene that will help you make that decision. But today's video, that's what we're going to talk about. So let's get over to where the economic news is for today. But I called it yesterday. I said mortgage rates are probably going to pop about 0.05. They did. They're going to come back down again today. We'll be in the high sixes by the end of the day. I can assure you that part. How do I know? Well, let's get over to the economic calendar. So right through here, here's all the data that we have today, and it's retail sales. I told you guys it was going to be a week when it comes to the economic data, but the numbers are starting to come in pretty nicely. So we have core retail sales that came in this morning, and what core is it extracts out some data, okay, some really volatile data. That's all that really is important in that part of it, what core means. So the previous reading was negative 0.1 on retail sales. It was supposed to uptick to 0.2, positive 0.2. It stayed in right at negative 0.1. That's a good sign. It means people aren't picking up their spendings, okay? And then the next thing, retail sales month over month. Last reading was negative 0.2, is expected to increase all the way to 0.3. It only increased to 0.1. So it's saying the consumer is starting to slow down. So let's get over to Yahoo Finance, see what their headlines are. You can see that right here. The retail sales missed, signs consumers are slowing down. And what else? Here's the one piece of data that I was like, okay, this might pop the market. Okay, what is it? It's right here. U.S. productions surged in May. So unfortunately, the retail sales miss is beating out this right through here. So that's Yahoo Finance headlines that we're seeing there. Go over to here on CNBC. Now, this is a caption that just came out right here. You can see it today, June 8th or 18th. And it says, American households have seen their purchasing power increase. I mean, I bet you guys are saying there's no way. There's no way that this is saying, I'm making more money or my purchasing power is going much higher because of the inflation. Well, if you go through this report, and again, guys, I'm just the messenger here. You don't have to shoot the messenger. You go down through here and it gives you a lot of statistics when it comes to this. Real wage growth. Well, unfortunately, over the pandemic, you had right through here, we had inflation just skyrocketing. So it basically said your income wasn't keeping up with inflation. Well, now it kind of is. You can see that right through here, and here's the charts that they just put out. And then when you go down through here, what another chart that they have is what your real earnings are. So the U.S. Consumer Price Index versus hourly earnings. Right now, again, remember think of this as the inflation stuff. The CPI, our consumer inflation. Remember we're learning CPI means consumer inflation. PPI means producer inflation. So right now, consumer inflation is at 3.3. Wage growth is at 4.1. So people are earning more than the inflation rate right now. I know you guys might be saying otherwise, but there's probably a lot of you out there saying, yeah, I'm doing okay right now. Okay, so that's that. So the data that's coming in, we're starting to show weaker and weaker, retail sales or the consumer side of the equation, meaning, okay, well, if the consumer slows down, well, that didn't slow down inflation. Well, that's what the Federal Reserve is expecting. So now with this data that's coming in since the Federal Reserve's meeting not too long ago, what's the likelihood that they're going to change the federal funds rate, the rate that they control? When are they thinking of starting to lower that? Well, let's go to the CME FedWatch tool. We're going to start watching this more and more and more until they actually cut rates. Because here's what this is. We're going to go to the CME FedWatch tool. What is this? Well, you can just Google it, but if you go down through here, you can see what's the likelihood the Federal Reserve will change the federal funds rate at the next meeting. What's the federal funds rate? It's the interest rate they control. It's not a rate that you really pay directly. It's what interbanks pay each other. But as that rate goes up, the cost of capital for banks goes up. Thus, they're going to increase rates on our side of the equation when it comes to car loans, credit cards, and things like that. So if you go down through here, let's look at the probability of what they're going to do at the next few meetings. So if I get my head out of the way, here's the kind of the nice thing that's going on right now. So in July, they're expecting nothing to happen. A 91% chance that the federal funds rate is going to stay steady right where it is. Where is it? Well, it's at 5.25 to 5.5, right through here. Okay, so that's what you got to understand from this. Now it's saying in September, that's most likely going to be a rate cut. It's over 50% for a rate cut at that point. We're going to watch this basically each week to see how that number changes based on the data that we have. Okay, so right now is expected with by 9/18/2024, the Federal Reserve at that meeting most likely is going to cut rates. So the economic calendar we have for today is right through here. We just went through that, retail sales and so forth. MBS market is basically just flat right now. Let me get my head back in this equation so I can kind of walk you through this. Right through here, this is how we follow, or what we follow, when we're trying to figure out what's going on with mortgage rates. What is it? Well, the MBS should give you a signal. MBS means mortgage-backed security. It's a bond that trades on Wall Street. So what you need to focus in on is what the yield's doing. Okay, this gives you the price. Most charts give you the yield, but this one gives you the price. So what do you need to do? Well, just do this. If the price goes up, which you're seeing right now, it's up 5, that means rates are going to come down a little bit, okay? So if the number up here is positive, means rates are going to come down. If the price of the bond is going down, which would be negative, then the rates would be going up. So a 5-tick isn't really going to do that much. We would probably get back down to 6.99 by the end of the day. But what I wanted to talk to you guys about now is when your lease is coming up, what should you focus in on? So if you might be kind of ready to buy that first house. Now, if your job's not secure, don't do it. If you don't have good finances, you don't have a little money put aside, don't do it. If you're still working on your credit, don't buy a house, keep renting. But when should you buy a house, or what tools can we give you or provide you to help you decide this? Well, the first thing I would go to is Altos Research, okay? Fantastic tool. We use it every day here. And what you're going to do is go to Products, Market Report. And what it's going to do is it's going to pop up something like this. Okay, you're going to put in your area. So Elgin, Illinois is just north of where I live. So I figured I would pop that in today. And it gives you the data of Elgin, Illinois. So let's just go through this data real quick so you can understand how this works. Okay, the median price right there, it's pretty self-explanatory. Median sales price of a home right now is there. Median price of new listings is here. Per square feet, average days on market, 58 days. That's still pretty darn quick. Okay, median days on market 35, so it's still a seller's market, and that'll tell you over here as well. But a lot of these key points you can see. Okay, so now price decreases. People are going to say, oh, see, a third of people are decreasing their prices. Well, this is average, 31%. Believe it or not, 31% is the norm. We had Mike on here, who's the founder of Altos Research, and he actually explained all this to us. I'll try to click a video or put our video from him up above if I can. And then you start seeing average rents, inventory. So let's look at here, median rents. Okay, so let's take that data. All right, so now we're going to go over to therateupdate.com. This is in my website, and go over to calculators, and we highlight rent versus buy. Okay, so let's jump in here, and I'm going to change some things. This is rent versus buy. So in here, we're going to say, well, we're looking to buy in Elgin, Illinois for $2,200 a month in rent. All right, how much would my rent insurance be? To say 15. And let's go to expected annual inflation, 2.5%. That's where we're going to be here shortly. The Fed wants us at 2. We're at 3.1. So let's take it in the middle, 2.5. Purchase price in Elgin area, we can usually get about a house for about $225. Let's even say $250 for right now, $250,000. All right. I'm going to put down 3%, which is $7,500. It is a 30-year term at 7% interest rates. Scroll down through here. You're really not going to have to change anything here except for right through here. Our taxes in Illinois are really expensive, so I'm going to put $4,000 in there, and basically everything else is the same. What's this telling us? Well, estimate total cost to rent, $138,000. Estimate total cost to buy, $72,000. How in the heck did it come up with this? Well, let's click here, and it'll tell you exactly how it come up with it. So it breaks it down right through here for you. It says if you're paying rent, pretty simple. You just take your rent, multiply it by those amount of years, and that's what you've paid in rent. But if you're looking to buy, you have a lot of other things to look at. Total cost of payments is right there. Total cost charges for closing, and that should be about $3,000, $4,000, $5,000. Property taxes, $22,000. Maintenance, $6,000, $6,000, so forth. So this gives you a total cost of that house, $142,000. Okay, it is higher than this right here. However, you're going to get some tax savings, and also buying a house, you're also hoping for that appreciation. So when you add all this in there, it basically blends it out, and it says, well, in this case, it's probably most likely better if you can, to buy. Now, this isn't always going to be the same. So if your area pops up and it comes in and says rent, well, you might still be able to look into buying a house. If it comes up saying you should buy, but your finances aren't in point and everything else isn't in point, then don't buy. Okay. Our goal here is to help educate you guys on long-term wealth. I don't care what next 6 months or year is going to be. I want you guys to learn how to build wealth over time. And real estate is one of the biggest ways to do that. So that's how all that works right through there. So we'll get out of that right now. And that is it for this morning. Well, my name is Dan Frio. You might say, who are you? Well, my name is Dan Frio. I do this report every day. I actually do 2 reports a day to inform you guys what the heck's going on. I'm actually a loan officer. I'm licensed in all 50 states as well as Puerto Rico. I'm also a mortgage broker set up with about almost 40 different lenders right now. So what does all this mean to you? Well, one, I'm licensed in all 50 states, so I can help you no matter what, no matter where you live. So reach out to us. Love to help. Then we also are set up with almost 40 different lenders. So how does that help you? Well, think of if you're looking to get pre-approved or you're trying to get a rate quote. So you've been taught, I need to get 3, 4, 5 rate quotes. It's hard. I have to call all these places. They're going to put in applications and pull my credit and do all this stuff. Why don't you just use us? Because I'm going to get you quotes basically from 40 different lenders, and we're going to go with the best one that's out there. So it's a one application, one credit pool. Just you're dealing with us during this whole process. Now, we don't have a call center, folks. We have 3 of us here to help you out. There's me, Alan, and Dave. So how do you get the process started? Well, first off, are you eligible for any grants? Check out that right there before you start anything. Next, if you want to put in your application, click the Apply Now button. Or you might even want to call in and ask for one of us. Well, you can do that as well. You're going to scroll down to the bottom of our website, and there it is right there, 844-775-5626. Or you can email me directly at dan@therateupdate.com. So thanks so much for watching, guys. I hope you learn everything on a daily basis. That's my whole goal, not just to watch it for entertainment purposes, to really understand and learn real estate. So that's our whole goal. And if that's you, what you're looking to try to do, please do one thing. Click the subscribe button down there. I think you're going to learn a lot on this channel. Take care. God bless. And I will see you in a couple hours at the closing bell. Take care, folks. Bye-bye.